Hey guys, welcome back to another exclusive podcast from IronFX. At IronFX, we're dedicated to bringing you the absolute best trading education to help you take your trading to the next level. In today's podcast, we'll be talking about how much should you be risking on a trade. Now, one of the common questions that traders have is when they're looking at a trade, they're always wondering, how much should I trade? How much should I risk on this trade? How many, what's the lot size I should use? Okay, the first thing I want to debunk is that you should not be using a standard lot size. What I mean by that is that you should not have this go-to lot size that you use. I see a lot of traders out there, because they're trading on their phones, MT4 on their phones, because they're, for the sake of easier calculations, they just use something like, 0.1, 0.5 lots, they take a trade, and then they adjust their stop loss, they adjust their take profit, right? Now, the problem with this is that when you randomly put something like 0.5 lots, depending on how far your stop loss distance is, you might end up be losing a lot of money or very little money, right? And of course, it also depends on the currency, 0.5 lots on something like pound Kiwi is very different from 0.5 lots on euro dollar, right? Just because, of the way it's calculated. All right, so one thing I really want to touch on over here is that before you take a trade, you need to first decide. Right, you need to embrace this new approach to trading where before you take a trade, you decide how good is this setup, right? Is this setup worth 1% of my account? Is this setup worth 2%? Is this setup worth 3%? How do you decide, right? You decide by seeing how many check boxes, how many of its criteria has been met. Right, if I was trading, so for example, one of the ways I trade this method, right, is I'll first look at the momentum. Is the larger time frame momentum in the direction of my trade, right? If I'm looking to sell, right, is the larger term momentum bearish? Okay, yes. Is the Ichimoku cloud red and above the price? Yes. Right, is what's the MACD telling me? Is there momentum in my favor? Yes. Is ADX above a certain value? Yes. Right, what's the Heiken Aishi saying? Yes. Did I break a key support recently that might push prices down a lot lower? Yes. Right, the more yeses I have, the more I allocate to a trade. If I have 3 yeses, maybe that's 1%. Right? If I have 4 yeses, that could be 2%. If I have 5 yeses, that could be 3%. Of course, I will not go that many into risking like more than 5% on a trade. I usually go to about like max 3%, anywhere from 1 to 3% of your account on a trade. So the reason for that is because the nicer the setup is, the more you should be risking on it. Right, if you find a setup that just meets the bare minimum requirements, right, then you put a smaller amount on the trade. Now, what people need to know is that when it comes to trading, it's not binary, meaning that you don't just take a trade or you choose not to take a trade. Usually, it's a case, yes, you don't take a trade, you do take a trade, and you risk more on it, less on it, right, or you risk a lot on it, right. It all depends on how nice the setup is. Right, and that is the first step into proper risk management, right? Seeing how good a setup is, then deciding how much you want to risk on it. Now, only when you have decided how much you want to risk on it, then you reverse calculate the lot size based on your stop loss distance, right? So if I look at a trade, I'm like, all right, man, this is a pretty good trade. The stars are lining up very nicely. I think it's a very high probability I get this trade correct. I'm going to risk 3% of my account. Now, let's just say it's 3% of a $10,000 account. That is like $300, right? So I would then say, if I were to be wrong on this trade, if my trade was to get stopped out, I would be losing $300, which is 3% of my account. Okay? So I first need to establish that this is the rule of the trade. If I were to get stopped out, I'm going to lose $300. Now, then I would then look at it and say, all right, where's my stop loss going to be? I would look at my stop loss and say, okay, I realistically don't expect price to reach this stop loss level, but if we do reach this stop loss level, I will lose $300. Then the last thing I need to do, right, I need to look at online trade calculator, right, and a lot size calculator, right. There are a lot of these online which you can look at, right. I would then go in there and say, okay, I'm trading, for example, euro dollar. My stop loss is 100 pips away. I'm risking $300, right? I'm risking $300, right? What is my lot size going to be, right? Then it'll tell you the exact lot size you should be placing on that trade, so that in the event where, the price doesn't, your trade doesn't work out and it goes and stops you out, right? The maximum that you'll be losing is that $300 or 3% of your account, right? This is the ideal approach that you should be taking to risk management when you're trading, right? Don't just go in and just put in a random, a random lot size, a random stop loss distance, right? You really need to, you can't just focus on the entry. You need to focus on the entry, the stop loss, the take profit, the lot size, the risk, the percentage of your account you're on risk on the trade. Then once you've planned out everything, you got the correct lot size, the correct distance, stop loss distance, then you know that you're managing your account in a very healthy way. You're managing your risk of your account in a very healthy way. Okay, guys. Anyway, I hope you found that session useful. That's it for me for today's podcast on, how much you should be risking on a trade. Remember, guys, that, you need to see how nice the setup is. Then you decide, okay, is it worth, increasing or decreasing the risk I would want to allocate to this particular trade. Find your stop loss distance, right? Then reverse calculate the lot size. It sounds like a bit, but the best traders, the professional traders out there, it's not that they don't have good trading strategies, but they have amazing risk management, right? And this is something we should, once you put it in your arsenal, in your habits of trading, right, you will realize that you have a much more methodical, much more statistical, risk balanced way to trading your account. All right. Now, do remember to subscribe to our podcast, as here at IronFX, we are dedicated to bringing you the very best trading education to take your trading to the next level. Until then, stay safe, trade safe, and peace out, guys.